Welcome to Deal Dialogue.
Happy New Year. Hello and welcome to Deal Dialogue, a discussion on all things M&A, financing, where we talk to knowledgeable experts about different aspects of planning, executing, and maximizing value in context of transactions. Today we have a special guest with us who brings a really unique perspective to business owners. Joining me, along with Tarek Chami, is Michael Yip, who is a Vice President and Portfolio Manager with RBC Dominion Securities. Michael, welcome to the podcast.
Thanks a lot, Rob.
I'm really excited to have Michael with us today for a number of reasons. In this series, we've covered a number of technical topics and deal-related issues. However, you can't have a deal without a business owner. Business owners can take many years before they are ready to consider a transaction. I'm so glad to be speaking with Michael today because of his unique experience, some of which I'm going to recount for you, but also because he's worked with many business owner clients, helping them prepare for transactions, and has actually sat beside them through the whole process of creating value. Before we dig into this, let me just give you a quick overview of Mike's background. Michael's background is quite interesting. He has experience in corporate finance, broadly speaking, which is M&A and financing. He built the derivative business for RBC Commercial Banking. He left RBC to join a prominent family office where he built a global macro hedge fund. During the financial crisis, he won a Morningstar Investment Award. He then brought his practice back to RBC in 2013. And just last year, he won the coveted Donald J. Langell Memorial Award, which is awarded to one advisor per year at RBC. Welcome, Michael.
Thanks. It's a lot of fun, and I really like this format. I think it's a great way from another angle to, provide insight across all the areas that business owners and our clients need, and our partners really to get going on this. So I'm excited to be here.
Great. Mike, what are you seeing out there today? What are the trends that you're witnessing in the current market?
Well, I think we're all seeing it, whether you're a wealth manager, accountant, lawyer, M&A banker. I think every week the volume of activity is increasing, and it doesn't really matter which angle it comes from, whether it's an unsolicited offer to a client, whether it's a client looking to acquire, whether it's a client thinking about transitioning to the next generation or trying to realize the most amount of value. It just keeps getting busier, and I think that's a function of two things. In what I would call the traditional economy, that's a function of demographics. As everybody knows, the baby boomers are looking to retire and transition right now and change the way they're living their lives, and that's just math. So we're in the wave of that right now, and that should continue for another 10 to potentially 20 years. And I think there's another segment of the market, call it the new economy, the new economy, in technology, and in particular Toronto, where we're seeing an explosion really of tech-related biotech, new economy businesses that have their own challenges as they create value. So there's really two fronts that's happening on, all positive, but certainly getting busier every day.
When you see these transitions happen, when they're not successful, what are the causes?
Well, I think very simply the root cause of it's tough. These transitions are tough no matter what. There's a lot of factors at play, but I think that one of the common causes is lack of planning in general. So when you think about the fact that, I think the statistics are at least 50% of Canadians don't have a will, and that includes business owners. I remember seeing a story about Prince dying without a will. So it really doesn't matter how many zeros you have behind your name. Most people are not planned. And if they're not planned, then the outcomes tend to be a lot more random and in some cases much worse than you'd want them to be. So I think the common element is planning or lack of planning.
I saw a statistic that said Canadian business owners, something like 80% of them don't have a plan for succession. Would you agree with that?
Yeah, I'd say it's just, again, anecdotally, it could be higher. So, when you talk about succession planning, Rob, what does it really entail? I mean, I think it's the concept of how are you building value in your major asset? And again, most business owners, their value is tied up in their one major asset. So do you have a plan for building that value? Do you have a plan for transferring and realizing that value? Whether it's how you take compensation out of the business, what kind of strategy you have for turning that into a lifestyle should you want to exit the business. So I think that's what I would call the overall business owner planning focus, what it should be anyway.
A plan sounds great. It's a document, but in my experience, it's so much more than that. It's something that's holistic, and it involves a number of different players to put that together. Can you talk a little bit about your views on how people work together to put a plan in place?
Yeah, I mean, you make the comment that it's something that's on paper, a plan. If you see one, please show me one, because I've never seen one before. I think that, planning comes across different metrics and different aspects of a business owner. So one is your personal plans. First of all, you have to kind of do the small things or the easy things first before you do the complex things. So our approach typically is, if you don't have a will, you don't have a financial plan, haven't looked at insurance, you haven't looked at your investments and compensation planning and aspects like this, estate planning, it's very difficult to go to that next step, which is far more difficult to manage, which is value creation, the M&A process. Do you build a business? I would say it's not only difficult, I'd say it's impossible. So, again, if you don't have shareholders agreements with your existing business, with your existing partners, those are all aspects of business owner planning. So I think that what a plan looks like to me is it really starts at the individual level, and then it starts to build out to the family level. And then when you're ready and you're more thoughtful and you get those major milestones behind you, you can start working with teams to look to increase the value of your business and make your business do what you want it to do. Do you want to retire in 5 years? Do you want to work until you're 95? Business owner planning really covers that broadly. So I don't know if I answered the full question, but I think planning is complex. There's a lot of aspects to it, and you need a team around you, and the team really looks like, of course, your accountant and your lawyer and your banker and your corporate banker, your M&A team and your wealth manager at a minimum.
Who's driving all this?
Yeah, that's a really good question. I would say that there is no one party that really drives that. I think RBC Wealth Management's best in class doing that. Oftentimes what you find is that an accountant or a lawyer drives aspects of the planning, but not the full range of the planning. So where we've been able to add value is obviously coordinating your trusted partners and bringing some perspectives to the table and actually seeing that things get done. It's okay to get a document from your lawyer or your accountant, but if it's not put in place, then there's not much value to it. So I think in an ideal world, we would be quarterbacking that, but not in every case.
I've been reading a lot lately about OKRs and objectives, key result. What is the objective behind it? What's the prize, so to speak?
Yeah, I think this goes back to why do 80% of business owners, if that's the real statistic, not have a plan? I think it's, to your point, they don't know what the prize is. And I think a lot of people are like this, not just business owners. The prize that we see is tremendous ability to create value in their business. And I'll give you an example. The example I gave it the other day, you have a $10 million business and it makes $2 million of profits. And then in another universe, you have that same $10 million business and it makes $2 million of profits. But you don't have an accounting system. You don't have a C-suite. You don't have your key employees incented. That second business in the bad universe, let's call it, fetches far less value on the market. And I think everybody can understand why. If you're a buyer, that business is far less attractive than the business you can buy. It's turnkey. It's been well planned. So, what is that differential? At least 70% more. 70%. So if you thought you had a $10 million asset before, you could have a $17 million asset. So that's the prize, at least from a wealth perspective. It kind of, when you hear those numbers, I think it allows business owners to focus a little bit more instead of looking at the next sale or looking at the minutia that they deal in day to day. I think the other prize that people don't really see is the range of outcomes to you personally and your family. So it can go from a very well-planned, well-thought-of transition or activity to grow your wealth and your value, and that could be a good experience, or it can go horribly, horribly wrong, and it could be a terrible experience, not just from the emotional toll it takes on you, but also, again, the financial toll. And I'll give you an example. The common one is illness. People think they'll live forever and that nothing will happen to them. And sometimes transitions are forced because of change in health of some of the key shareholders or business owners. So that's an example of unplanned and bad outcome.
You've been working with a number of business owners over the last year. You've had some that have successfully exited. What were some of the things that were important to them, and how did you help them focus?
Yeah, I think going back to that first question is they don't know. So I think the way that I like to try to help my clients is letting them know what's at stake. When they know what's at stake, it gives them, a guiding star. Everybody needs that. I think the next thing is what's next. Business owners are everywhere. I mean, a lot of people are everywhere. They have many things to manage. They have employees to take care of, their families, their businesses, and that focus is pulled in many different directions. So the ability to focus them when needed and do it efficiently to move them along the value creation process is very, very important. So I think that's something I do, I'd like to think, and something I think good advisors should be doing. And I think it's also bringing the resources in a very thoughtful way to them. So, if I see a business owner that had this conversation last week, got an unsolicited offer from a private equity fund out west, and wanted to spend lots of time engaging in a one-on-one discussion with them. And I know what the business owner does day to day. And I said, you just frankly don't have time for this. This doesn't make sense. And I'll give you an example why. I said, if somebody knocked on your door and said, I want to buy your house, would you spend every waking hour talking to them about that and only do a transaction with them? That makes no sense. Mm. And when I said it, the business owner kind of sat back and said, okay, well, how do we do this? So recognizing that there is a process. So that's, I think, how we help them. Where are they at? Also, as well, figuring out what their goals are. Would you like to transition this business in the next 3 to 5 years? Would you like to keep working in the business? Are there any family aspects that we need to think about? Do you have family members working in the business? That adds its own element to think about. Oftentimes that plays a very large role in the kind of deals that a business owner might make. So you have to really understand the business owner's personal perspective before you start providing any advice and any roadmap. But I think it's ultimately understand, provide a roadmap, help them execute it efficiently.
If I'm a business owner, if I'm an advisor, whether it's a lawyer, an accountant, a commercial banker, where do you start?
Yeah, it's a good question. I think you need to know that the resources are out there. I think that to be a better advisor as well, you need to spend a lot of time educating yourself. So I think where you start is if you're seeing this become a bigger and bigger part of your practice, as you should, I think it behooves all advisors to make weekly investments in moving up the craft of business owner planning, let's call it. So what I like to do personally is, when I'm in the car, I listen to 2 great podcasts. One is by National Public Radio called How I Built This by Guy Raz. And
I know the other one.
You do? Okay.
Deal Dialogue?
Deal
Just
Dialogue, that's right. And absolutely, that's number one. That's number
Leave
one.
that
That's number one on my number one on my podcast list.
We found another listener.
Yeah, exactly. Well, you're going to get at least 3 more after this because I'm going to tell my parents. So, there's Deal Dialogue by RBC, which is obviously best in class. And I think another podcast, which I think is spectacular, is Built to Sell Radio by John Warlow, who's a Canadian.
Yeah, he's very good.
Yeah, and he's interviewing, as an example, I think it's about weekly, entrepreneurs that have gone through transitions. Some are good and some are bad. And you're getting the nuts and bolts. You're really getting an MBA and M&A. That's the way I like to say it. So I think you start by perhaps educating yourself as much as you can, and you'd be surprised how far you get. And I think the second one is the resources are there. So, at RBC as an example, if you are a RBC banker, we have business owner planning, which is quite unique amongst the Canadian banks, where we engage with our top clients around this process. And I think you also look for networks that have done this before, whether that's your peers, other advisors, your advisor. So just start asking around, start trying to build this advisory network.
It's great to hear your perspective on things because we spend so much time talking on technical issues, and you're really talking about things from the perspective of the business owner, which is fantastic. If you had to sum up 2 or 3 takeaways for this discussion we've had today, what would they be?
Well, obviously, you make Deal Dialogue #1 on your podcast list. Second thing I'd say, the summary is really there's a lot at stake. And until somebody tells you there's a lot at stake, I completely understand why a business owner wouldn't focus on it. So there's a lot at stake. It's worth your time to look at. And the last takeaway is whether you're an advisor, a banker, a lawyer, an accountant, get started, connect the networks. Let's try to make the experience as easy as possible on the business owners we look to serve.
Great. Mike, this has been a fascinating segment. Thanks for speaking to us today.
Thanks.
That's it for this segment. Our guest was Michael Yip, a vice president at RBC Dominion Securities. On behalf of myself and Tarek Chami, thank you for listening and good luck with your deals. Deal Dialogue is a production of RBC Mid-Market M&A.